Hey everyone, welcome to another edition of Trading Bitcoin with your host Tone Base, trying to get like my cameras situated and stuff. Interesting morning. I just got back to the apartment. I was actually spent all morning at Baruch College. There was a blockchain course there. Today was like their last day, and I was one of the speakers, one of the guest lecturers today, just talking about the economics, Bitcoin, trying to make sure that the next generation of our smart young people don't turn into shitcoins, creating the next Ripple. So that's kind of what I've been doing today. Got back not a little while ago, set up my computer, and here we go. Let's go take a look at the price. The price has been moving. Okay, why is this? Hold on. Oh, jeez. Okay, there we go. Okay, sorry about that. Just trying to organize here a little bit. Check out the video description. I added my 2 articles about trend change that I wrote like 5 years ago back in the Cointelegraph days. Let me check out the live chat. I'm hoping Tyler Jenks can join me. I sent him the link. I think he's on some client phone calls. Yeah, I'm not looking directly into the camera. Like I couldn't get the camera right with the setup that I have. And so you have to bear with me here. And let me make sure that if Tyler does join, I'll know. So I have to set it this way. All right, cool. Unfortunately, Leah can't join us. She is on her way to New York City to speak at MCC. I don't think she's going to be around for consensus. I'll be around for consensus. There's like a bunch of meetups tonight. I might join one of them. I'm not sure yet. Or I might just do some work. All right, let's go to screen share. Where are we here? All right, here it is. All right, cool. Let me hit the play button here. Unmute it. Oops. Whoa. Oh boy. There we go. Okay, cool. Got it. Welcome to live streaming by yourself without any help. It's actually a royal pain in the ass. Okay, so I've actually written 2 articles about trend, which is why I couldn't find that second article. So I wrote an article about trend. It was called Intro to Trend, but I wrote this article in the middle of the last bear market. It was written on August 24th, or published August 24th, written a day or two before that. And here's what Bitcoin looked like at that time. It was trading at about $500, and we were flat out in the bear market. And I'm pretty sure I would have been bearish. We had just fallen out of a giant descending triangle. I was looking for a pullback to the bottom of the triangle. Sounds familiar, guys? And then I was anticipating more downside. We can take a look at the conclusion. No, I was already long-term bullish at the time. Interesting. I was long-term bullish. That means that at this time, I had assumed this to be the bottom of the bear market because I was long-term bullish after the big breakout, and I'm sure I changed my mind the moment this was broken because my ultimate targets were much lower. You can review all my articles. All my work on the price of Bitcoin has always been public. I have never deleted a single tweet. I have never removed a single article. Everything I have ever said about the price of Bitcoin is public on the internet. It's up to you guys to find it. And I hate it when people lie because they just lie for their own self-interest. So go review my old articles and you'll see. So I was intermediate term bearish, but short term bullish. And the intermediate term bearish turned into eventual longer term bearish. I was a pretty big bear in the last bear market. People hated me. But the next article is way better because this article took place after the big low set in. This was the big low in early January. And this article talks about what is needed for a trend change. And I talked about this last night in depth. So please go to yesterday's video to review this because I don't want to talk about the same stuff again. Okay, let's look at the price of Bitcoin. Let's see what happened in the last, 12 hours. I streamed the video at 1 in the morning. It's past 2 p.m. now. So here's the weekly chart. This weekly chart updates once a day. So we're clearly way higher than this price. And clearly this has gone past my point of the bull trap. Now, you guys also have to remember that I was one of the first people to turn bullish when we dropped to 4,000. People were in disbelief and I was a buyer. Now, I was a buyer at that time, but we have already gone past what I expected. So we will see how that ends. Now, people forget that I was buying here and people were making fun of me buying Bitcoin at 4,000. Okay, that's them. We had a couple of 13s here right off the moving average. We have now gone up really, really quickly. And let's see what happens next. Let's look at the more live updating data. Here's the weekly chart. And now the week is getting close to over. Today's Friday. Now, this is a 5 candle. And it's not the most ideal 5 candle. It'll be kind of difficult to get a 9. And it'll be kind of difficult to get a 9 because the 5 is so high up, right? The 9 has to close higher than the 5. And when a 5 is an expanded range candle, it makes it a bit problematic. So we will see how that goes. Still have 2 days. Craziness can happen. But for now, the weekly chart remains bullish. According to sequential, the weekly chart went bullish upon the break of this green line. And it's still saying potentially up to 4 more weeks of upside. And you still have the countdown phase. So the sequential TA can go higher. People ask me, how come I'm using sequential and I don't use anything else? Because there's 100 other people that are using other stuff. First of all, if I used every TA that I know, each video will be about 4 hours long. I mean, some people want that. I don't, and most people don't, right? So if you want me to use all the TA that I know, I mean, I'll be doing an 8-hour video every day. That's not going to happen, right? So I will stick to the one thing that I think I know better than anyone else in the crypto space when it comes to trading, and that's the sequential. Maybe there's a couple of people that know sequential better than me. It's very possible. Today, there are a few people that know it better than me, not 2 years ago when I started using it. And some of those people that know it better than me have learned it from me. It's just that they've spent the last 2 years trading it and perfecting it and studying it. And I spent the last 2 years traveling the world and explaining what a blockchain is. So it's very possible there are people that know it better than me now, and that's great. I hope they know it better than me. So the weekly sequential is still bullish. Let's go to the daily. So actually, I was looking at the history. I'm going to publish a clip from a 2015 video that explains what I thought about the end of the bear market in January of 2015. I found a good video for that. But I'll need time to edit and stuff. Okay, here's the daily chart. Now, the daily chart also went bullish right here on a green 2 going above a green 1. Did I want to take that bullish trade? No, but you don't have to be me. You are responsible for your own trading decisions. So if you're an expert at the sequential and you're not as cautious as I am, that would have been a great trade. I would not have taken that trade, or maybe in a very tiny amount, but certainly wasn't confident enough to talk about it publicly. And therefore, I didn't talk about it publicly taking that trade. I said I wouldn't take the trade. But those that took the trade did well. We're now up over $400. We're getting close to 6,500. I am aware of Leah and Tyler's bet, and they will lose that bet if Bitcoin goes above 6,500, and that's okay. Again, I need a pullback. Please watch yesterday's video. It was very, very good. It talked about what I need to see. I actually have a really good question from one of my consulting clients that we're going to review. I'll read the question. It's a good question. Okay, let's just go through a chart really quickly. Here's the 12-hour chart. The 12-hour chart will be hitting a 9 later today, and I will be keeping an eye on that. That might be the swing high. It might be the swing high, but the daily is still saying 6 more days, and the weekly is still saying 4 more weeks. So there's plenty of bull market left. The question is how fast it's going to happen, and sequential doesn't tell you how fast it's going to happen, just tells you how many days it's going to take. I wish Leah could join us, but Leah is on her way to New York City for Blockchain Week. And Tyler is busy on calls, so if he's available, he'll join me. Here's the 4-hour chart. The 4-hour chart has been pretty relentless. The 4-hour chart hit a 9, swung up through a 1, not the kind of one I like, but again, the rules don't change. When you have a 1, a green 1 following a green 2, followed by a green 2 higher than a green 1, higher than the 9, that is a bullish entry. Whether you choose to take that bullish entry is up to you. I would not have taken this particular bullish entry. Those that did take this bullish entry are in a very profitable trade. Perhaps this will last 4 more candles because it's very likely that a 9 on a 4-hour will be in sync with a 9 on a 12-hour. Now that still goes against the higher level sequential counts. The hourly chart is on a green 4, so maybe in about 5 hours, you're going to get another topping opportunity. Here was a monster topping opportunity. You had a combo 13, a combo 13, a sequential 13, and 2 candles earlier, you had a 9 and more 13s, right? And the market slowed down, and then it broke out again. So let's see if we get another top in about 5 hours, short-term top. You can choose your time frame. I'm not here to choose your time frame. My time frame is on a bigger scale. Oh, there's another combo. My time frame is on a bigger scale, but I show you all the time frames, and you can choose which one you want to trade. This is Bitcoin dominance. Bitcoin dominance continues to rise. This is very good for the end of the bear market and the start of the bull market. Remember, one of my biggest requirements as to why I expected lower prices on Bitcoin is because fundamentally the crypto space is shit. Fundamentally, the crypto space remains shit, okay? Now, the code of Bitcoin, the underlying code is beautiful. Everything in the code is great, but the fundamental environment and the regulatory environment is total trash. And the biggest part of that trash is the amount of shit coins that we have, from Ripple to Ethereum to Litecoin to all of them, right? Now, if Bitcoin dominance continues to rise and Bitcoin dominance starts to approach 80 or 90%, then that becomes my cue that the bull market is ready to take off. So with each tick of Bitcoin dominance and the sustained tick of Bitcoin dominance, I become more and more convinced that the bottom is in. Now, this is really, really good. We just reached a brand new high. Now, notice this beautiful 9 right there, and we're now higher than that. So Bitcoin dominance, this is the daily chart. The Bitcoin dominance is at a new high since December of last year. It's a good start, but a lot more is needed. I need to see Bitcoin dominance break this setup trend line. I need to see Bitcoin dominance break this setup trend line. When Bitcoin dominance can break this setup trend line, I believe that's when, like, if the worst case scenario, I become the ultimate Bitcoin bull when we break 70% on Bitcoin dominance, because I believe Bitcoin dominance is going back to 98%. All right, let's see what else we got here. I don't know if we even care about the Bitfinex, right? But the BitMEX funding rate is negative, so it's like everybody wants to short this market. I wouldn't be shorting this market. That's insane. If you've watched my YouTube channel this entire year, I've been short-term bullish on Bitcoin way more than short-term bearish on Bitcoin. I'm just still longer-term still bearish because the big trend is still down. Now the short and intermediate trends have continued to go up, but I would never short it other than very strategically. I wouldn't guess, like I wouldn't short here. I would wait for a shorting opportunity. Where would I get a shorting opportunity? Well, if we go back to the charts, where were my shorting opportunities? Well, it wasn't here because this 9 on a 4-hour chart is not a reversal candle, and it's not the kind of 9 I would short. On a daily scale, that is a shorting opportunity for me. And if I was an active short-term trader, I probably would have taken the short trade off of this 9 reversal candle, though it's not great. It's not, look, it's not exactly this 9. Now, I know this is, let me go to the daily chart. I know this is Bitcoin dominant, so it's not exactly tradable. But I'm not talking about trading. I'm talking about it's not whether the asset itself is tradable. It's about the pattern. It's about the pattern. This is what I want to see. This is a monster short. Now, if this asset was tradable, and I got notified that this candle is about to complete, I would be all over the short if the asset is tradable. This asset is not tradable. This is another example of a short trade. Beautiful short trade, okay? And the reason I'm talking about it is because we'll get to that. This is not a great short because this is not the kind of 9 I want to short. Now, notice this 9 here is a huge 9, and on a daily chart of Bitcoin, this is the daily, so maybe the weekly. Right, this is the same candle, right? See this giant candle on a 9? Not the best shorting opportunity. Not the best one, right? This is what you want to see. Where are we here? Bitcoin dominance. This is the candle you want. Now, if your asset doesn't give you this candle for 2 years, then you may not have a trade for 2 years. Guess what? There is 2,000 other assets. Something in the world is giving you a candle like this every single day. You just need to know it's happening in real time. And then you short this candle on this 9. And if that was a 13, even better. And then you profit. Okay? This is shortable. This is not shortable. This will not always be the perfect trade. This will not always be, this was a good trade to the short side, but I would not have taken it. Okay? Now on the opposite end, again, this 9, not impressive. This 9, maybe. It is a doji, not really a big uptrend, but probably got out of this trade stop loss up here. Maybe I took it a red 2 against red 1. I don't know, but this is a buying opportunity. I'm just looking at the candles. I'm ignoring that this asset is not a tradable asset. That's irrelevant, right? You find these opportunities in tradable assets. And I'm leading into something with this, so keep that in mind. I am getting some tips. Kirill, let me see what you wrote. Hi, Tone. In previous episode, you said that we will have some more good buying opportunities. What probability do you give we will see the pullback in 1 and 3 months? I think it's a greater than a 50% probability that there's going to be a significant pullback within 1 to 3 months, and it will hopefully present a good buying opportunity. But everything is probabilities. There's no such thing as 100% in trading. It's like cards, right? Like blackjack. It's all probabilities. Even if you get a blackjack, it doesn't mean you're going to win the hand, because the dealer can also have a blackjack. Okay, sorry, I can't see all of your questions, and I don't think I have anybody helping me with questions. So I'm asking me questions on live chat. Unless it comes with a tip, I'm probably not going to see it. Okay, let me not waste too much time. I also want to look at Uber and Lyft, and then we're going to talk about something, do a deep dive into one of the questions. I haven't seen, oh, wow, whoa. The premium on Bitfinex is just getting crushed. Interesting. There's a 9 right here. Not that that means much, but so the premium on Bitfinex is almost gone. Interesting. Very interesting. The GBTC is obviously going through the roof. Not going to talk about that today. Ethereum doesn't seem to be moving anywhere. It's irrelevant. Gold doesn't seem to be moving anywhere. Euro, we'll wait for the 9. We'll see what that 9 looks like. So we'll talk about it next week. S&P 500, whoa, nice rebound today. I am still short-term bearish, the S&P 500. I would love to buy the S&P 500 off of a daily 9, bouncing off the setup trend line. So let's see if, this wasn't a great shorting opportunity because the 9 was a bullish candle. But it would have been a cautious flag. This was a great shorting opportunity. In fact, I'm sure I talked about it as a short because it's a reversal candle after a big run up on a 9. Haven't had a great 9. That's not a great 9 either. That's not a great combo 13. Haven't had a really great opportunity to short the S&P. Tone, can you please disable the chat? Too many idiots. I can raise the, I'm already on a 3-minute a slow mode. I can raise it to 5 minutes. And then people will really have to think about what they say because they only get to comment once every 3 minutes, every 5 minutes, unless they're an admin. And I have 1,700 viewers now. Wow, amazing. Wow, that's impressive, actually. Thank you guys for watching. So here is the weekly S&P 500, and it's also, it doesn't look like it's moving much today. Hey, so I want to look at Lyft because today, oh, there it is. Told you guys. Told you once Lyft broke this line, it was a massive short. So, and this is why I was very careful about going long Lyft and why I didn't go long Lyft. I think I will get a buying opportunity in Lyft between 35 and 40. If I get the perfect low, I'll take it. If I don't get the perfect low, I have to wait for the bounce. Uber, this is going to be great. Here's the daily chart of Uber. I'm looking at it for the first time right now. And as expected, it went up, but it looks like Uber was priced nicely. Doesn't seem to be moving much. Let's zoom in. Let's look at a 10-minute frame. Love the 10-minute chart. Wow, Uber is so steady. That is very interesting. This is great. It's actually really good. We'll talk about Uber tomorrow. Not tomorrow, sorry, Monday and Tuesday. Oh, actually, Monday through Wednesday is consensus. God knows if I'll do videos. All right, I got another question. Thank you, Celeb. Why does the 3320 pullback in late January 2019 not count as the pullback and higher low needed for a trend change? Great question. Excellent question. Thank you, Celeb, for the excellent question. I will review that question in 1 minute. Okay. Sorry, guys, I'm just going to quickly glance at Zoom. Oh, it's on a 10-minute chart. That's why. I'm going to quickly glance at Zoom. All right, Zoom looks very, very bullish right here. If you get a price flip to a green 1, green 2 above a green 1 above the consolidated highs, beautiful long opportunity. My favorite Zoom, however, is the shitcoin Zoom, and people are still trading it at $2. Hey, thank you for the cup of coffee, Patrick. I want to take a quick look at a quick peek at Amazon. Nothing really to say. Waiting for sequential. It's bearish-ish. Not the best of 9s, but did mark the top-ish. Yeah, markets are weird. Well, let's get back to Bitcoin. And Tesla is usually the popular one. I would stay away from Tesla right now. Tesla looks bad. Tesla looks like as much as I was looking to buy Tesla right here after the earnings, and I probably would have went long Tesla, I would already be completely out of that trade way prematurely. And now I would be, if I'm in Tesla, I'm shorting, not going long. If I'm in, which I'm not. Okay, I have a couple of good questions. So I'll take your question first, Celeb, and then I want to read the question I'm going to take next. And here is that question. And it's also a very good question. Tone, could you explain, thank you, Robert, who is one of my consulting clients, I guess. Tone, could you explain why you did not need a pullback to call the bottom in the SPX, but are requiring a pullback to call the bottom in Bitcoin? Is this because you saw the SPX crash December 2008 as a pullback within a bull market as opposed to the bear market? That is actually correct. You answered your own question. I actually didn't see that second part until just now, but we will discuss that some more. Okay, so let me take your first question. The first question from Celeb, or Caleb, sorry if I mispronounced it, is how come you didn't see this as the secondary pullback, as that pullback? So we're going back to this article here. This is my classic article on trend change. This is trend change part 2, written in February of 2015. Trend change part 1 was written in August of 2014. And I've written like 40 articles in between. It was just, it needed time to talk about a trend change after the end of the bear market. So this is what we're talking about here. The bottom was in at 150. We rallied to 350. So if we assume 150 is $3,000, the equivalent to 350 is 7,000. So I labeled these to mimic the price of Bitcoin. And this is on a log scale. That's why the area is getting smaller, right? So this is 150 where Bitcoin fell to in January of 2015. And Bitcoin bounced all the way to 350, which is the equivalent of $7,000 today. And then Bitcoin fell. Now, it was very interesting how Bitcoin fell and when. We can review that, but it'll take some time. But I was looking for a pullback all the way to 200. Remember, Bitcoin fell all the way to 160, but there was a lot of time in between. So going back to the question at hand, we're looking at the weekly chart, but we can also look at the daily chart. Let me zoom out. I'm just checking which one is better to look at, the daily or the weekly. Right here, this is the, okay. I guess we can look at both. I guess let's look at weekly first, okay? So here's the big drop. Here's the bounce off the 200-day moving average. Here is the next bounce off the 200-day moving average. So there's two reasons why I did not consider and still don't consider this secondary low equivalent to this point number 2. One of the reasons is the bounce from the first low was not significant enough. If we go back to the weekly chart, the bounce from 3,000 was only to 4,000. It was very small and it was very quick. And there's 3 reasons. That's one reason. The second reason is the secondary low is very, very close, too close, in fact, to the first low. Now you can say that, well, Tone, in the 2015 bear market, the secondary low being 165 was very close to the original low of 155. I would say that is true, but there was 6 or 8 months in between those lows. In this case, there was only 1 month in between those lows. This happened at the middle of December, and this happened at the end of January. So we're talking 6 weeks between the lows versus 8 months, right? So that's the main difference. So those three reasons. The rise of the first low was very shallow. The fall was too close to the original low, and it happened too soon, way too soon. Okay? And that's the reason why I did not consider this to be the secondary low. Okay? In hindsight, I could be proven wrong, and this was the secondary low, right? Again, markets find a way to separate the maximum amount of money from the maximum amount of people. So that was a good question, and I hope I answered it. Now back to the S&P question, right? Let's go back to the S&P. So here's the S&P daily. I know I lost all of my annotations because stupid TradingView doesn't give you. What is this line? Oh, below this line, S&P is in trouble. So here's the daily S&P, right? Now, this is the daily S&P. To me, or we can look at the, let's go to the weekly S&P. The S&P is in a bullish trend. And fundamentally speaking, I have always said that the stock markets are up. I'm anticipating a bullish trend in the S&P for years and years to come. I've been a bull of the S&P 500. Now, if you want to accuse me of calling a bad bottom, it happened in 2009. I did a terrible job calling the low. Now, also in 2009, no one knew who I was. So I did a terrible job in calling the low in the S&P 500 in 2009 to myself for my own portfolio. I screwed up my own portfolio. I did a terrible job recognizing the low. Now, one of the reasons I did a terrible job recognizing the low is because I was listening to too many gloom and doomers and reading too many and following too much bad advice. Now, those that think that I give terrible advice, there is a very simple solution. Don't listen, okay? It's very, very simple. I stopped listening to free advice on trading, and it was the greatest thing I ever did for my portfolio. However, I learned a lot by listening to bad trading advice. And it allowed me to have knowledge and make good profits. At the moment, I'm the guy that's trying to teach you not to take other people's advice. So this is why this YouTube channel is totally free. Now, in hindsight, I should have been able to call this low based on a weekly 9 and the daily 9 that took place right at the low. Now, there's no way in hell I could have predicted that buying the weekly 9 and with the daily 9 on March 9th would have been the ultimate low of the bear market. There's no way I could have known that. But it would have given me a good bullish trade to kick off my portfolio in the bullish trend, and then eventually I would recognize it. When should have I realistically identified the bullish trend in the S&P 500? Right here. This is the weekly chart. On the week of July 20th, 2009. This is where there was a little bit of a pullback and then a strong rebound. I can't see volume on this chart. And then a strong rebound and then a breakout above prior highs with a green 2 above a green 1. This is where I should have recognized that we have a bull market. When did I recognize that we have a bull market? Unfortunately, I was late. Not only did I miss this, I also missed this. This would have been another nice top, another nice correction, another big rebound, and this would have been another nice top. Over here, around this area, actually, it might have been even later than that. Either here or here, I finally admitted that the S&P is going to go to all new all-time highs and we're in a 20-year bull market. And this is where I completely gave up and realized how stupid most of the gloom and doom blogs are. Okay, and I was very late to this. Now here's the difference, right? So if I go back to the S&P, this was a beautiful buying opportunity over here. Look at this year-long consolidation, a breakout, and a back test of prior highs. Like, this is a beautiful buying opportunity right here of the S&P. And you can say, oh my God, you're an idiot. You're buying the S&P 500 in 2016 and you made 33%, right? Because the S&P doesn't move very much. Beautiful green 2 above a green 1, breaking setup trend, breaking a year-long consolidation. Beautiful, beautiful. And then a pullback to that prior area, and then it takes off like a rocket to the upside. Okay. So right here, when we corrected in early January, for now, if I go to the daily chart, I guess I can use the futures. So the futures may look different. No, I'm going to stick to the cash. If I use the daily chart and I go to 2018, January 26. Okay, that's the high in 2018, I think. It might have broken at the end of the year. Now, when we started to crash in early January, I had no idea how serious of a crash this would be, but the sequential helped me out in finding the top. And I was, if you go back and find the video from February 9, 2018, I know I did a video that day. I am trying to catch this falling knife in the S&P. Why? I'm doing it because I trust the sequential. And I was a buyer on this 9. Okay. Now, I had no idea that this would be the low for the year. None. How could I have known? I'm taking the high probability short-term trade. Okay. Right here, because of the 9 sequential and the reversal candle that it's making. I have no clue this is going to be the low. Let me see. I'm actually curious if this was, if this is still the low. It wasn't. It got broken. That's okay. I had no idea that this was going. I can lower that a little bit. Had no clue whatsoever. You know what? Let me use the magnet. Perfect. And now I need that. Okay. I had absolutely no idea that this, it wasn't exactly the low for the year. We broke this low in December, right? But it was a low for almost the entire year, right? And look at this run up. Granted, we came close, right? But the point is, right here on this candle, TA told you to get in. Now, at the time you're getting in, the market doesn't have to do what your TA tells it to do. It could have been a dumb trade, and then you get out early and keep your losses small. This led to a decent trade, decent profitable trade that probably got stopped out on the back end. It depends on your personal stop loss philosophy. My stop loss philosophy probably would have gotten me out somewhere in this area. Other people's stop loss philosophy might have gotten them out in this area. Other people might have set a stop loss below this low and rode this trade all the way to new all-time highs. The ultimate all-time highs, because this has not yet, oh no, it was broken. I think it was broken. Yeah, we did break all-time highs. Okay. Now, as you enter the short-term trade based on TA, you end up in a very good trade, potentially for a while. Now, if TA doesn't give you this buying opportunity, it doesn't mean you're able to identify the low. Now, where am I going with this? I think I had another tip. Sorry, guys, I wasn't paying attention to the live chat. Nope, I haven't. Okay, cool. Now, where am I going with this, right? Now, TA gave me a buying opportunity back at the lowest point of the bear market in the S&P 500 in 2009. TA also gave me a buying opportunity at the early crash of 2018. Now, TA also warned me right here at the high, warned me here, but it didn't turn, but that wasn't the new swing high, warned me up there. There's a 9 right there, I see it, right? Now, did TA help you buy this low on a daily basis? It wasn't perfect. It bottomed on an 8 candle, close to a 9. It wasn't perfect, but it was still a decent buying opportunity off of TA. The problem that happened to me in Bitcoin is that my tool, the sequential, on a weekly scale, did not give me a buying opportunity at this low. And my tool, the sequential, did not give me a buying opportunity at this low. That is not the fault of TA, okay? TA doesn't work this way. TA is not gonna hand you, TA is not going to print you money, okay? Now, the reason why I bought Bitcoin at 4,200 is because I was buying off of this 9. This is where I was buying Bitcoin. I bought it here because I expected this to be a bigger swing. I bought Bitcoin in this vicinity. I sold some of that Bitcoin for a profit here because I didn't like the nature of this. And then I didn't get a chance to get out with a profit, so I waited on that trade until I exited that bullish trade in this vicinity here. Okay, now because now there was other TA that helped you buy this low. For example, the weekly was bouncing off of the 200-week moving average. That is a good TA that I like. But for me, a single TA is not enough to enter a good trade. I needed more than just a bounce of the 200-week moving average. My sequential on a weekly did not give me a good entry. My sequential on a daily did not give me a good entry. My sequential on a daily at 3,300 did not give me a good entry. So if TD is not giving me a good entry, I'm not going to take the trade. But that's me. You don't have to be me. You have your own thoughts, I hope, to take on your own trades. Now, had TA that I trust and has been profitable for me over the last 10 years, had that TA lined up, I would have been all over this low. Now, if I get another opportunity, like the opportunity that the S&P 500 gave, like if ever in my lifetime I get an opportunity, like the sequential 9 weekly and daily at the end of the 2008 financial crisis, I will sell my house and I will go all in, okay? But Bitcoin did not give me this opportunity. And my metrics for fundamentals are different than other people's metrics for fundamentals, like Willy Woo and some of the other guys. One of my biggest metrics for fundamentals is Bitcoin has to decouple from the shit coins. And it looks like it's happening, but it wasn't happening at the low. It's happening now, 5 months after the low. So in hindsight, this could have been the low, but neither my fundamental metric nor my TA metric told me it was the ultimate low at the time. And when that happens, you need to enter the best trade you can. And that means I have to wait for a pullback, and I have to wait for the trend change. If my TA does not allow me to enter and try to knife catch the ultimate low, my TA tells me to be cautious and wait for either my perfect metric. If TA lines up on a secondary low, I will be all in. I'm not going to blindly buy Bitcoin if it pulls back to 4,000. 200 here is 4,000 today. 150 here is 3,000 today. 33% rise from 150 to 200, 3,000 low, 4,000 backtest. Okay, just because we pull back to 4,000 may not be enough for me to enter the trade. Now, if we pull back to 4,000 and we're bouncing off of a moving average, and I have a TD9, and I have a reversal candle, I'm happy to go all in. Otherwise, I am more than willing to wait for point number 3, which if this is 3,000, that's 4, that's 5, that's 6, and that's 7. This is my article from 2015 talking about a trend change, and I applied it to the numbers of Bitcoin. Now, these numbers aren't random. These numbers are very specific. Now, let's go back to what happened to Bitcoin in its trend reversal in 2015. Here's the daily chart. Let's go to the summer of 2015. I have some annotations here. Okay, here is the low. Here is the ultimate low. The ultimate low came down to 150. We can magnify this. If you look at this candle, look at the top, look at the low, 152 and 40 cents. I have some tips. I'll take a look at those in a minute, guys. Now the low was 152. What is the high? See, again, this is a beautiful shorting opportunity. Look at this candle. Look at this monster reversal candle on a 9. I would love to short this candle. We have not had this candle yet, right? So we went from 150 low. What is the high on this candle? The high is 309. This line here is this area is 350. So when did I write that article? I think I wrote that article in February, right? But right here, I wanted to match it to that. So this is 150. This is over 300. This is 100% increase in the price of Bitcoin. Okay, those that don't trust my math, probably should be green. Okay, 100% rise right there, over 100%, slightly over, right? So we went up 100%. Then we made a low. And then we started to rise past it. But look how we never actually broke out. And this is why 2015 was such a frustrating year. If I go, we moved up 100%. We made a secondary low, pretty close, never broke out. Made another low, never broke. We got stuck in this range. And look what happened at the end of this range. We fell again. Now, this is Bitstamp. And on Bitstamp, we only fell to 198. On other exchanges, we fell all the way to 165. Okay, all the way to 165, depending on which exchange you were on. Okay, and right here was higher than that point. The high here was let's say 320. The low here on this exchange was 210. On other exchanges below 200, like 160, 170. That is almost a 50% drop. And look how much later this took place. So it was actually very difficult to get that secondary low, but I'm still waiting for it, right? And then even if you got scared and got out, the best time to buy Bitcoin at the end of the 2014-15 bear market wasn't even in 2015. The best time to buy Bitcoin was in May of 2016. Because if you bought Bitcoin in May of 2016 at $450, you never had a single sleepless night because it just went straight up. It did, back test right here for a second, which you could have slept through. But Bitcoin did nothing but go up. So, and this is what I'm saying. I am not worried. I'm also not worried because I've always hodled my Bitcoin. But even as an unbiased analyst, so you missed the 150. So you missed the 160. You could have stayed away for a year and a half and made the perfect trade off of this ascending triangle, buying Bitcoin at $450 or here or anywhere in this stretch, anywhere from April 2016 to May 2016 was the ultimate perfect buy. Now, it's not, if you call the ultimate low here, and then again the ultimate low here, it might make you famous, might get you on TV, but you might have also get lucky. There's nothing lucky about buying the breakout of an ascending triangle because probability is there. You're not guessing. To me, the perfect trade at the end of the bear market of 2014 wasn't in 2015. It was here. It was in this area. Because that's the one trade you can go very big on, and you can still make plenty of money as it goes from 450 and eventually tops at 20,000. That's the trade I would respect the most, okay? Because this is a skill trade. This or this may be a skill trade, but it may also be a luck trade. I don't think there's anything luck about this trade. This is what I want to teach people because there's no luck. This isn't luck. This is a statistically perfect trade right in this area because of the ascending triangle. I don't have it drawn here, but I teach this ascending. Those that attended my workshop know this area well because we've discussed it many times. That's the perfect trade, okay? Now, if the stars and the moon line up at the low, like what happened in the S&P 500 on March 9, 2009, if you saw it, if your TA lines, if the TA that you trust, not the TA that another person trusts, not the TA that a YouTuber trusts, if the TA that you trust happens to line up at the low, and that's why you took the trade, that's skill. But your TA isn't always going to line up at the perfect low. My TA lined up at the perfect low for the S&P several times, many times, right? My TA also lined up right here. My TA lined up perfectly right here at this high. My TA lined up perfectly at this high, at this high. One of my favorite trades that I made was shorting 7,500 right here, 75, 7,600. That was one of my most perfect trades. It was right there. Actually, no, I'm lying. The 5,000 short was better. This is probably my second best. My second best call was this. Now, Jeff Garzik screwed up the trade by canceling seg with 2x, but the trade was to short this 9 doji candle at 7,500, and we corrected 40%. I got to find a video of my perfect call on the $5,000 top. I was using Bitfinex back then, and it lined up perfectly with the 913, right at the high, right here. 913 right at the high. I called that one, and I called the 3,000 buy perfectly as well because my TA lined up. My TA lined up with those, right? Lately, my version of TA hasn't been lining up very good with Bitcoin. I'll admit it. My TA has not been lining up very good. By the way, I was a huge bull off of 6,000 right here in February 2018. Why? Because my TA lined up. It was a huge rebound on the 8 candle, and I called a buy right here. And then I cautioned here because of this 9, right? So when your TA lines up, it works. When your TA doesn't line up, you have to wait until your TA lines up. And I personally don't have a problem with announcing the end. If I go back here, it's Bitcoin, daily chart. So I have to kind of zoom out. See, people on Twitter that barely understand trading, people on Twitter that barely understand trading may have an issue with calling the end of the bear market in Bitcoin in May of 2016, as opposed to calling the end of the bear market on June 11th, 2015, right? Like, you can call the end of the bear market right here, and it's actually perfectly reasonable because only in this area. And this, by the way, was due to a Ponzi scheme. This was not, this wasn't organic. This was Ponzi, but it did give you good volume. But calling the end of the bear market here doesn't mean you're wrong. That's when you're comfortable taking on the bullish trade. And that was an amazing bullish trade, okay? Now, I guarantee you that I would have been so leveraged, and I was actually, I took this trade. I was pretty leveraged. You can make way more money off of this trade than that trade. Just because you're buying Bitcoin at a lower price doesn't necessarily mean that you're going to make more money out of it or more Bitcoin out of it. Okay. I got some questions. Tone, in salmons, when will Bitcoin bottom? Where are we? Have you seen panic pain yet? Like, I don't know. Maybe I should get George Salmon on the show. So the article we're talking about is George Salmon capitulation. Reference this article many times. One of my favorites. Salmon and I were writing at Cointelegraph together at the time. We were also doing videos on the World Crypto Network about these videos, basically. We were doing them together. And he talked about how Bitcoin has not yet capitulated. And he wrote this article on January 10th. It was published on January 10th, saying that Bitcoin needs to capitulate and crash. And if we go back to the price of Bitcoin, Bitcoin literally crashed like the next day. And people accused George Salmon of doing it, and he didn't, right? So here, George Salmon writes that article on January 8th or 9th, right here. It gets published on January 11th. And then 3 days later, Bitcoin crashes almost 50%, okay? And that was the capitulation he was looking for. But remember, capitulation is not the end of the bear market. Capitulation is here. Despondency is here. Depression is there. So if you look at this chart, That's capitulation right here. That's despondency, and that's depression. Now, depression doesn't have to be a lower price. Depression could be time. So if we go back to the price of Bitcoin on a daily scale, what the hell is it? This is the capitulation. That's the capitulation. Capitulation happens to mark the low. But this is probably despondency. And this is depression. You guys have no idea how bad it was towards the end of 2015. Like when Bitcoin fell, after Bitcoin bottomed in January of 2015, rallied multiple times above $300, and then fell below 200 in August of 2015, you have no idea how devastated people were. It was horrible. Like, you know how many big crypto businesses went out of business here? This was depression. This area is depression. It's hard to say where we are right now, but even if Bitcoin has bottomed, there will be pullbacks. Look how many pullbacks we had after the bottom. 1, 2, and it was the third pullback that gave you the best buying opportunity. If you recognized it, did sequential help me? Absolutely not. Sequential was useless for me, okay? But did sequential help me get out at this high? Possibly. I had a combo and sequential. I had 2 arrows right there, okay? Now, if I go to the weekly chart, wow, this video is really going long, isn't it? If I go to the weekly chart in the bear market, again, the weekly chart helped me call this top absolutely perfectly. I got to find those videos. If we go to the weekly chart, did the weekly chart help you buy the ultimate lows? Well, it wasn't great. There was a weekly 9 right here. Not the most perfect 9. Would have been nice to see a 9 down here, but hey, TA doesn't always line up. There was an aggressive 13 on that secondary low weekly candle. Aggressive 13 is like my least favorite. It's like my least confident part of TD is the aggressive 13. So aggressive 13 alone is not enough. Aggressive 13 with a monster weekly reversal candle, that's something, okay? The moving averages weren't really established yet. The 200 week has just shown up, not enough to really be useful. And I made some bad calls on this rally as well back in the day. But here's what I didn't miss. I sure as hell did not miss this giant 6-month-long ascending triangle. I didn't miss that. I was all over this bullish trade. All right, guys, let's see some more questions. On the S&P, you say you bought on the 9. Ah, shit, just lost the question. Crap, hold on. Let's scroll up. All right. On the S&P, you say you bought on the 9. Did you wait for the green 2 over the green 1? No, I did not. Now, good question. Let's go back to the S&P daily. This is weekly. Let's go to daily. Let's go to the current environment. Let's go to this. Let's zoom out. Over here, I would not wait for the green 2 above a green 1 because it's a strong bounce on a 9 itself. I'm taking a chance, okay? Now, it depended on the candle. If this 9 candle would have been a red candle closing down here, I would not be a buyer. The reason why I'm a buyer is because of the price action and the type of candle it is. For example, I am not a buyer on this 9, but I am a buyer on this 9. If this is the kind of 9 I'm working with, Then I wait for the green 2 to be above a green 1. And I don't even like this green 2 above a green 1. I'm still not comfortable. Okay. Let's see if we have any other 9s at the low. Right here, right, another good example. This is not the kind of 9 I would be buying on. Now, if this was a reversal candle, I might be buying on this 9, but this is the kind of situation. I'm waiting for the green 2 to be above a green 1. Okay, this is not the kind of 9 that is screaming buy. Right here, this 9 I'm buying. And the reason, and I'm sure I said so if you go back to my videos, because the strength has already come in. The market is already reversing. I don't want to wait for a green 2 to be above a green 1 because I want to get in on this trade early. Okay, so I'm buying somewhere in this vicinity here. I don't want to wait till the end. I already see strength. Okay, not every trade is going to work out, by the way. The trades don't work that way. So that's a good question. It really depends on the kind of 9 it is. And the only way to know this is by understanding the indicator, learning, reading. What do you think about leveraged ETFs? I hate them. I hate all leveraged ETFs. I think they are tools to steal your money. I hate the 3x bull, 3x bear financials. I hate them all. I hate leveraged ETFs. They are tools to steal your money. We can go deeper on this. I think Tyler disagrees. But. All right, guys. I still have 1,800 viewers, and the live chat is actually moving kind of quickly. I'm at the end of the live chat. Trayvon James. Trayvon James watches my stuff. He's a huge fan. He thinks I'm a scammer, which is great. I don't want you to take my advice. I want you to learn how to trade and make your own decisions. Tone, when can we admit? Well, you can admit whenever you like. When can you admit that the bull has started? So many have missed out on getting into Bitcoin cheaply, waiting on your promised double dip. Well, I don't promise anything, right? Again, that's not my problem. That's your problem. You can admit that the bull market is here. I will admit the bull market is here when I have confidence that the bull market is here, right? And it may not happen for another year. I don't know. I don't know what magical day I will admit that we're in a bull market. When I recognize that we're in a bull market, there will be a video titled Tone Thinks We're in a Bull Market. I'd rather be late to calling the bull market than wrong. Because if I call the bull market and then we make a new low, that's bad. If I call a bull market later than the average person, I can live with that. If you don't like it, you're welcome to watch other people, right? I'm here to teach you how to trade and how to, hopefully, you can protect your money. I'm not here to make you rich. That's not what, if you think a free YouTube channel is going to make you rich, you have way bigger problems. All right, guys. Oh, wait, the chat's scrolling. I just stopped. I looked at Nifty the other day. Like, go back to like a video, like 2 videos ago. I know they're long, but that's what happens, right? Guys, why are you talking about BitConnect? Clearly, I need to spread out the time between your ability to write comments. Why do you think the ETF is not going is not a good investment. I'm not saying the ETF is not a good investment. I'm saying a leveraged ETF is a tool to lose you money. Tone, thoughts on the length of time of the 14-15 bear market and this one? Well, I anticipated the current bear market to last longer than the 2014-15 bear market. I anticipated this for several reasons. I'm going to turn off screen share. I'm not going to look at any more charts. I think we looked at enough charts. Let me just look at the current price of Bitcoin. It is at 63.84, and I'm going to turn off screen share. Okay, so what was the question? Oh, the length of time. So I anticipated the current bear market to last longer than the last bear market. This occurred for several reasons. One, there wasn't this many stupid people and this many shit coins in the last bear market. In the last bear market, people were a lot smarter than in the current bear. Like the average crypto person was a lot smarter in the last bear market than the current bear market. So I anticipated, because there's more stupid people in this bear market, more people need to get financially hurt. So that's one of my reasons for anticipating a longer bear market. The regulatory environment is very different. I think the regulatory environment could really crack down, and that can hurt prospects. I don't see Wall Street getting in the way other people are hopeful Wall Street's getting in. I have many fundamental reasons for anticipating a longer bear market this time around than last time. So that's, and the bull market took a little longer this time, right? Like the bull market was the price started going up significantly in late 2015, and it lasted all the way to the end of 2017. The prior bull market was a lot shorter. So the bull market was longer. I anticipated the bear market to be longer. It still might be. Guys, it is still possible to go under 3,000. I don't understand why people think that it's not possible to go under 3,000. If your portfolio is not prepared for Bitcoin going under 3,000, if your life is not prepared for Bitcoin going under 3,000, you will go broke. You will. All right. On what platform can we use the TD sequential? This platform. That's it. The code is only for TradingView. It was built specifically for TradingView. You can buy it on Bloomberg. I mean, there's nobody stopping you from buying it on Bloomberg. It's going to cost you $3,000 a month on a 2-year contract. Now, it comes with a huge advantage. You get to participate in a chat group with Tom DeMark himself and a bunch of portfolio managers trading hundreds of millions of dollars, and the only thing they use is sequential. That's what you're paying $3,000 a month for. And one of my clients does that. Next question. All right, guys, I think probably it's time to call it a day. I have to take a look at what's going on in New York this week, what meetups we have. I think this was a good video, a little longer than I certainly anticipated. So, hey, thanks for watching. I don't know how many videos I'm going to do this weekend or this week, mostly because of all of the events, and I'll be busy. I'll try and keep an eye on the price, and I'll try to bring you some streams, but there's absolutely no schedule. All right. I will talk to you all on the next one. Wait, is that really Trevon James? Look at TRX versus Bitcoin. Can someone validate that that's actually Trayvon James? Like, I wish I can click on people in the live chat and see their YouTube channels. Do I have a chart of TRX? If I have a chart of TRX, I'll look at it. How about that? Let's do that. What is TRX? Is that Tron? Ah, you're in luck, Mr. Trayvon James. I have Tron versus Bitcoin chart on a daily scale. The last time I looked at this chart, thanks to the TradingView blockchain, which to this day is a lot more immutable than Ethereum, the last time I looked at it was in August of 2018. Oh, wow. Oh yeah, I'm using old. Oh God, this is like the sequential from like 3 iterations ago. We got to change the candles. Give me a minute here, guys. See, this is what happens when you don't look at a chart in a year, right? Like you have to change the candles. You have to do this. I have to go to background. I have to get rid of that. I have to get rid of that. Hit OK. Now we're getting somewhere. Holy shit, this thing is just a disaster. Here's the daily chart. We can now pull up our indicators. Let's go to favorites. We're going to pull up the moving averages. We're going to pull up the sequential. Leave the defaults. Close that. Boom. So Tron gave you a beautiful selling opportunity on daily sequential. Not beautiful. It could have been a little bit better. It's a good enough. Oh, wait, I'm sorry, guys. I'm not screen sharing. My bad. My bad. My bad. My bad. Boom. There it is. Haven't looked at it in a year. So there was a 9 right there at the high, the last high back in January. We're on our way down. What can I say about Tron? Well, a little bit of a mixed bag right now. You had a couple of green arrows right here. Hold on a second. Favorites. Yeah, I think that's the one. Yeah, the 2,000 likes. Yeah. So you had a couple of green arrows here. You finally got a sequential 13, but here's the problem. You are in a downtrend. All of your moving averages are trending down. They're all accelerating down. You had a 9, but now you have a red 2 going below a red 1 below the 9. That is a reversal candle with a sequential 13. While that is a bullish sign, that's a bearish sign. And the fact that you're on a 2 of 1 setup in a new countdown phase is another bearish sign. So I would lean bearish here. It's irrelevant to me how far it has already fallen, because I think that you're going to break these lows. And the next support level for Tron is 0, basically, right? So it looks like Tron is done. TA is saying Tron is done. That's the daily TA. The daily TA is leaning bearish, but not ultimately, right? Let's look at the weekly. The weekly is a hell of a lot uglier than the daily. The weekly hit a 9, went straight down, then gave you a red 2 below a red 1. It sucks that it never even rebounded off the 9. You're on a 4 of 9 plus 5 of 13. You're being supported by setup trend. But if this setup trend breaks, Tron is done. Tron is crushed, okay? So it's very, very likely Tron is going to new lows. This is objective. Like If Tron was bullish, I'd say it's bullish, right? Like Ethereum is looking bullish right now in dollar terms. But we're looking at, oh, wow, look at that. Look at that beautiful 9 right at the high. Wasn't the best 9 to trade. Wasn't even perfected. Wasn't a reversal candle. Not the best of 9s. So there you go, Trayvon. I'm not checking a derivative of TRX. I really don't care enough. But thank you for your tip. I'm not going to pull up anyone. Sorry. All right, guys. On this note, we end this with Tron. Please check out tonebase.com. Please support. Check out the store. If you want to buy a t-shirt, they're all there. And if you want to support my work, please check out the affiliates page. Sign up for TradingView, VPN, buy wallets. And of course, if you're going to be shopping on Amazon, please click one of these links first. This is my current tech gear, which I will be greatly upgrading this summer, along with my computer and all my other tech will be upgraded this summer. Maybe I should wait for the bull market, do it then, but I have to do it this summer. Also, the workshops, I will be teaching the TD sequential in a webinar a week from Sunday. There was a in-person workshop in New York, have 4 seats left for that. They're going to take place by Broadway and Wall Street. I'm going to do that tomorrow. And you can still buy the on-demand version of the intro to trading webinar that I did recently. All right, guys, if you want to know where I'm traveling to, please check out the public calendar. I will continue to put stuff here that I am involved in. All right. I will end screen share now, and I will talk to you all on the next one. Bye, guys.